Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Wednesday, February 5th. Well, after yesterday's fireworks and explosion on the upside, we're seeing a little bit of a pullback here this morning. We've got the wheat market down around 4 cents, corn market down 2, the bean market down 5 cents to unchanged. The meal market also in the same neighborhood, down around $5 to unchanged as well, more or less in the spreads, and the soybean oil market down around 5 points. Yesterday's explosion brought a lot of buying into the marketplace by the index guys and or by the funds. They were buyers in the neighborhood of around 10,000 contracts of wheat, 9,000 corn, 8,000 beans, 8,000 meal, and 1,000 soybean oil. But even though with all that buying, we still saw where the managed money is still estimated net short the wheat, net short the corn, net short the soybean oil, and still net long or added to their long positions in the beans and in the meal. The whole marketplace in here is kind of being spun around the meal market / bean market. We're going to have a USDA report coming out on Monday, and we continue to do bean business, and as a result, the trade is tightening up their ending stocks numbers to an unmanageable level. So we got to kind of cut down on our export pace. How are we going to go and do that? And that is by three reasons. Is number one is to go and try and get Brazil moving a little bit faster on their exports, trying to get some cancellations out of here in the U.S., and probably more importantly, trying to get the Argentinians on track, which the farmers continue to not want to sell into their marketplace, and that's continuing to keep in fuel with bean business coming out of the U.S. for both beans and meal, and as a result, the trade out in the world, that being the user and or domestically, continues to get a little bit nervous about the availability of Argentinian meal, and thus the run-up in the prices that we've been seeing here. So a twofold situation in the soybean complex, the tightening of our carry-out numbers and the Argentinian lacking as far as providing supplies to the world marketplace at this time. So that kind of gave us the blow up yesterday. We saw short covering in the corn and the wheat in our belief. Maybe there are some buy lines as far as people wanted to go pin the strength in the wheat market on winter wheat conditions, but it's still early. It's just that basically the trade's been net short those two markets, and we just need a little bit of run-in and seeing some cash movement coming on in. So we are back in the markets off in the overnight trade, and some of the other leaders that have been commonplace here have also seen the weakness in the overnight, that being the wheat market, which was strong yesterday. The meal spreads up front, seeing a little bit of backing and filling in the overnight trade. The crushing margins have also been backing off in the overnight trade. And we also saw some weakness in the Kansas City wheat spreads. So once again, starting off to this morning, back in fill. And we did see some good cash movement yesterday, so that's another reason for seeing a little bit of backing off here this morning. Was also seeing some good Brazilian selling for beans yesterday in yesterday's rally. Later this morning, we're going to get a weekly ethanol statistics report out, and then tomorrow morning we'll have our weekly sales. Once again, all eyes will be on the beans and meal sales as we continue to run stronger than what the USDA is currently forecasting. Once again, these are my opinions, not that of ADM or ADMIS.
That's his favorite class. She was at the football game last night. 25 and a quarter. UVA. I know. I've been short.